All right, guys, we are going to go over price action and market structure. Now, please pay attention to this section because this is the most important section you will ever see in your entire life. Price action and market structure is the foundation of everything we do as traders, and without it, we have nothing. So pay close attention. It's very, very, very important. Now, you're probably wondering, first and foremost, where do we trade? There is only one prop firm to trade on in this entire industry that is trustworthy because I have created it. LegacyFundedFutures.com is the only prop firm, and I mean the only prop firm created by an actual trustworthy person that is not out to get your money. The rest of these prop firms are going to screw you. They're going to take your money, and when you become profitable, they are not going to pay you out. Trust me when I say that. I have tested them all. They do not pay out. Legacy Funded Futures does pay out. I guarantee it. I back it because it is me. You will have zero issues with Legacy Funded. You guys can get accounts very cheap, large amounts of money to trade with very fast, and it's just the best way to go. So visit LegacyFundedFutures.com today and get your account. But trust me when I say they cannot hack into these servers. We have it all down packed for you guys. So you guys will be good at Legacy Funded. Now, when it comes to price action, market structure, there's only two kinds of market structure, but they're both very important. We have bullish and bearish. There is a third, but it's that little gray zone where we don't trade it. We don't touch it. And that's called consolidation. Now, when we have a bullish market structure, which means we're moving to the upside, there's a couple things we want to look at, but the main one being very specific, okay? And that's higher highs followed by higher lows. I'm going to show you guys exactly what that looks like. So if I go over to my drawing tool, my brush tool, I'm going to show you this is the start, right? So what we have here is the foundation. It's where we start, and that's that support zone. From that support zone, we begin to push up to a higher high right here. We drop that leg to a lower low or a higher low, and then we go back up, higher high, and we drop back down to a higher low. Okay? This is called bullish market structure because we're going to the upside and we're creating a higher high followed by a higher low. Now, I'm not going to sit here and find the perfect example for you guys because there's no such thing as a perfect example. Some days are ugly. Some days are beautiful. If it's extremely ugly and you can't really tell what's going on, we don't trade it. Patience is key in this industry. A lot of you guys don't have patience, but you're going to have to develop patience if you want to be successful. You can't get on here every day, even though the markets don't look good, and try to force a trade. It doesn't make any sense. There's times you're going to come on and market structure is just not there. You just don't trade. You're not going to make $1 million in your first week. It's slow and steady, but eventually you're going to compound big wins, get a bigger account, and start to make a lot of money. So just trust me when I say, do not overtrade. Do not force trades. Look for market structure first. So how do we know that this is a bullish market structure that is staying bullish? Well, as you can see, price created a higher high and then a higher low here. You see this level here? We did not break past the previous spot. So that previous higher high and higher low, we didn't break past that. Now, if price would have came down here and started to push down in this way, boom, that is now a lower low. Back up, lower high. Back down, lower low. Meaning we are now in a bearish market structure and price is no longer bullish. When we are in a bullish market structure, we are looking for buys. We want buying opportunities to the upside, okay? Because we're going to go with traffic. We don't want to go against traffic. We want to be with traffic. If traffic is moving up, we want to look for buy positions, right? We're going that way. Now, if we're dropping, and I'll show you an example in a second, we're looking for short positions. We want to sell, okay? Very, very, very important that you guys make sure that when you buy or you're longing, you're in a bullish market structure. When you're shorting, you're in a shorting market structure, which means a bearish market structure, okay? Now, I want to show you guys an example of a bearish market structure. And again, they're not always perfect. It's not always just this beautiful, amazing setup, super clean. You know what it is. It doesn't happen like that. I wish it did, but it doesn't. Okay, so first of all, we have to establish our main resistance, which is right here. Okay, now that we have our main resistance, we wait for that push to drop down. We have a lower low here, followed by a lower high, lower low, lower high, major drop for a lower low, right? Which drops into our zone here. But look at this. We started to push up, creating a higher high and a higher low, a higher high and a higher low. Market structure has changed. Now this happens every day. Market structure cannot stay bullish and it cannot stay bearish. It has, the best way to put it is it has stamina. Okay, picture a runner running miles and miles and miles. It has stamina. It's eventually going to die out. And when it does, it's going to switch the other way. Now it doesn't always switch smoothly like this. Okay, sometimes it consolidates first. And I'll show you an example. As you can see right here, we create a beautiful support zone here. We push up, higher high, higher low, 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 higher high. Now from here, we didn't go into a bearish market structure. We went into our third type of market structure / price action. That is called consolidation. This is consolidation. Now what that means is price is moving sideways. We're going up, down, up, down, up, down, up, down, up, down. We finally broke it here. As you can see, we break out of that zone. We consolidate a little more and boom, we drop. So consolidation is going to happen. We do not trade consolidation. If the markets are consolidating, we stay out of the markets. And it's as simple as that. There's no reason to trade markets that are consolidating. We wait. Either price is going to fix itself, correct itself, get better looking, or we'll come back tomorrow. We'll try again. But we're not forcing things, guys. A lot of people like to force. You cannot force in this industry. You cannot. You're going to lose. We can't lose. Like we can't purposely go into the market knowing in our heads there's a chance we're going to lose because market structure is not nice. That should never happen. If you're going to lose, you're going to lose because market structure was perfect. You got in and you just happened to lose. But to get in when market structure is ugly, to look for sells while market structure is bullish, to look for buys when market structure is bearish, to get in while it's consolidating in general, you're setting yourself up for failure. We cannot do that. We have to stay consistent. We have to look for perfect market structure and only trade that structure. That's it. We don't get to just, hey, I really need rent money. I have no rent money. I have to trade it. I need to make money today. You're setting yourself up for failure psychologically and physically. You can't do that to yourself, guys. So make sure you follow the guidelines of basic market structure. And we're going to get into some more stuff. Support and resistance is very, very key as well with market structure. But guys, trust me when I say be patient. Patience is key in this industry, and you're going to find that out very, very fast.